Welcome to Good Money Guide TV. We're here with Ryan O'Doherty from CMC Markets. We're going to have a quick chat about spread betting. What is spread betting, who it's for, what are the main benefits, the main risks, the best time to trade, and also the most common mistakes traders make and how to avoid them. So, Ryan, how are you? Welcome.
Thank you. Thanks for having me.
Thank you for joining us. So you're from CMC Markets?
Yeah, that's correct. CMC Markets. We offer spread betting and CFD trading around the globe. So.
Super duper. So just take us quickly through what spread betting actually is.
Yeah, no, definitely. I mean, spread betting is a very popular way of trading the financial markets. So it's only available here in the UK and in Ireland. And it's a different way, I guess, to trading than you're probably used to when you're trading physical equities, etc., in the sense that you're trading a number of pounds per point, and that regards to how many points a particular market moves. And it's multi-asset, so you can trade a whole range of different products, currencies, indices, FX, cryptocurrencies, treasuries, etc. So you get a wide range of products to choose from. But there's a number of advantages. Spread betting is capital gains tax free, so that's one of the main features and why it's available only here in the UK and Ireland. But the big advantage is that you can actually benefit from both a rising and a falling market as well. So traditionally clients are used to physical trading, physical share trading, where they have to wait for the market to go up in value to profit. With spread betting, you can benefit from both a rising and falling market.
Okay, that's great. And in terms of risk, what are the main risks involved in spread betting?
Well, the other major benefit is that you're trading on margin. So you only need to put in a small amount of your own capital to take out a much larger position.
Sure.
So that's great. You can get access to markets that you wouldn't normally be able to get access to, but then that can amplify your profits because you're only putting in that small amount, but your actual exposure is the net exposure of the position. So you can amplify your profits, but you can also amplify your losses.
Right, okay. And in terms of who it's for, I mean, who is a suitable customer for a spread betting broker? Who should be trading it? Should an absolute beginner be trading it? Should you have some experience in the market?
Yeah, I think it's for both. I think definitely some experience helps because there are risks associated with spread betting, spread bet trading, but it is there for the new trader as well. So there's a whole lot of tools that clients can use to sort of get familiar with the markets. So they can use demo accounts, for example, so they can play around with how to get used to the markets, what sort of risks are involved, how they can place trades, etc. And you can trade in such small amounts. So you can trade in fractional amounts. You can trade 0.1 of a pound per point movement. So you can get into it quite small, and then as your experience grows, you can then start to increase your exposure. So it really is for a good mix of people. And it's because it's multi-asset, it attracts a number of different clients from different areas. So you've got a lot of the regular traders that trade your FX markets and your indices markets. Then you've got clients that have come from physical share trading, coming across into the market and getting familiar with those types of products. And you've got the new wave type of traders coming through that are interested in the likes of cryptocurrencies, etc. So it really does cover a wide, broad range of clients.
Okay, and obviously multi-asset means, of course, you can trade a wide variety of markets, so shares, foreign exchange, cryptocurrency, indices and commodities. What would you say obviously on the CMC Markets platform, what would you say are the most popular markets that your customers trade?
Yeah, definitely. I think the new wave traders will start with, let's say, some equity trading because they're kind of used to that sort of market base.
There's a nice news flow.
Yeah, absolutely. That familiarity is a really important thing for clients when they come on board. But what we start to see is as clients start to get used to what products are on offer, you'll start to see them move towards your indices, which is probably the most popular product. Because it's a diversified way of getting access to the market. So you believe the market's going to go up in value, so you'll look at a general position in the UK 100, for example, or the US 30. Then if you use indices, then the next biggest one is FX. I mean, FX market, it's one of the most liquid markets in the world. There's a lot of people that trade different currency pairs. The spreads are lower. There's some real advantages in trading those, and the volatility is there. So there's opportunity to profit from those markets.
Sure. And as of course you offer a multi-asset platform, should we just have a quick look at your platform?
Yeah,
and you can talk us through how your platform will typically look.
Yeah, definitely. I mean,
where things are and what you can do.
Yeah, I mean, one of the things with platforms these days, you have a whole range of very different platforms out there, and you can see just on the screen at the moment, you've got a huge range of features that are available. Now, this is probably a more advanced screen, but one of the tools on our platform is that it's completely customizable. So you can start off with a very basic screen to start with, just have a watch list, some charts, and your positions. And then as you start to expand, you've got access to a number of trading tools or trade ideas, such as sentiment, what other clients are currently trading at the moment. You've got economic calendars, so you can actually see major market events and how that's going to affect the market.
So that's in the bottom right.
That's in the bottom right.
Yeah.
And then you've got tools like Reuters News, where you can get a constant stream of updates of what's affecting the market. Yeah. And you've got notification tools as well. So there'll be a notification pushed to your mobile phone or to your desktop just to say certain events are happening in the market.
And is that client sentiment sort of top, middle, right?
Yeah, the blue and orange bars, that's really quite a good tool for new traders especially. It's showing you what other traders are currently doing. So you can start to see whether or not they're long or short on a particular position. So you can see the UK 100 there has got a net long position. So it's got more clients are long on that trade than short. But then if you go down to, let's say, the SPX, you'll see that there's a net short position rather than net long.
And I remember, I read somewhere you can filter that sentiment down.
Yes, absolutely.
So clients that make money and clients that lose money.
Yeah, absolutely.
So you can look at what traders who are actually making money do.
You've got two types. You've got all clients, and you've also got your top clients. So we diversify or mix those up a little bit so that clients can see what the top clients that have made money over the last 3 months, what they're doing. And so you've got a whole range, not just that, it's position value as well as number of clients.
That's interesting.
Yeah. And
in terms of sentiment on your platform, do you ever look at how the markets have reacted to your sentiment? Because when I was at Investors Intelligence, we used to run a sentiment indicator called the Advisor Sentiment Indicator, and it's been going since the 1960s. And we'd basically look at professional advisor sentiment, and we would say, well, everybody is bullish, so everybody thinks the market's going up. So because everybody thinks it's going up, it obviously crashes.
So it's a contrarian view.
It's a contrarian indicator, quite a good lead indicator.
And it can be. And I think that's why we broke it down into all clients and top clients as well. Yeah. So you could really see the difference between what the general populace is doing in regards to whether or not they're net long or short, but then see what the profitable traders are doing. And being able to compare the difference is actually quite interesting because quite often it'll be the opposite. Yeah. And so that gives the client, especially that hasn't traded a lot in the past, the ability to sort of say, well, actually, maybe the all view is not the right one to go for, but the top view is. Sure. So,
absolutely. Well, that's what makes a market, isn't it?
Absolutely.
Different opinions. Differences of opinions.
Absolutely.
And also, finally, obviously you've been with CMC for a long time. You've been in the markets for a long time as well. For anyone either thinking of getting into spread betting for the first time or even for experienced spread betting, in all your time in the markets, what would you say are the top 3 mistakes that people make when spread betting?
It's a good point because there's probably 3 that really stick out. It's the first one is to the clients really need to do their research, really understand the products that they're trading. It's too easy to go in and just go do a quick trade on a particular product and then lose a certain amount of money on that. And it's worth doing some research. And then the next one is really around risk management. So when placing orders, you've got a whole range of tools that can help you prevent risk. So you've got your stop losses. You've got guaranteed stop loss orders, which protect you against any sort of adverse movements. And a lot of clients don't place those when they first get onto to trading, and you can lose a large amount quite quickly when some of these markets move are quite volatile. So definitely the research element and then sort of your risk management tools are really important elements to get right. And then cost is probably the next thing to look at. Yep. There's a number of providers out there in this sort of spread bet sphere, all offering different spread bet costs associated. Some of them are hidden, some of them are up front. So just be really aware of what costs are involved in placing a trade because that eats into your profit. So the more it costs you to place the trade or to hold that position for a period of time, so just really investigate the costs involved.
Okay. And on costs, actually, it's quite an important point.
Absolutely.
I mean, the costs of spread betting are sort of are built into the spread. And there's traditionally you have your spread costs, which is the market will be trading at 1 and 2, and your price will be slightly wider than that. And then also you have overnight financing costs.
That's right.
As well. So just talk us briefly through spread costs and overnight financing as well, because I think it's important for people to, when customers see a product that doesn't have any visible costs attached to it. I think it's important that they understand
I
how.
totally agree. I think the spread cost is the number one. So obviously the difference between the bid and offer price is the spread.
Yep.
So the tighter that is, the less the market has to move before you start making a profit. So you want to have a tight spread. So if, for example, FTSE is trading at 7,000 and 7,001, there's a 1 point spread.
Yep.
If you're trading at £1 a point, that's initially going to cost you a £1 to get into the trade. So that's your spread cost. And different markets will have different spreads depending on the liquidity. So the more liquid the market, probably the tighter the spread.
Sure.
So that's the first cost. Holding costs. So if you hold your position overnight, because effectively you're in a margin position or you're leverage trading, so you're borrowing.
You're essentially lending them money.
Exactly. So you're only putting in a small amount but taking out a much larger position. So effectively you're borrowing the rest of the funds. And so if you hold that position overnight, so past 10 p.m. UK time, you'll get charged a holding cost, a bit like interest on a loan in any sense. So you've got that cost associated as well. And then you've got commissions. So on spread bet you don't pay commissions, but with regards to equities, what happens is they widen the spread by the value of what that commission is. So you don't get charged an individual commission cost, you just get a wider spread.
So it varies based on transaction size.
Absolutely, and the market that you're trading. So yeah, just it's one of those things that you don't really notice when you first get into trading, but worth investigating and make sure you've got a good deal.
Sure. Well, Ryan, thank you very much for your time.
No, thanks for having me. No, it's been a pleasure.
Well, thank you very much for watching this episode of Good Money Guide TV. We'll be back with some more videos shortly.